The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends. We're down a little bit, down 17 points. Volume is slightly better than the last couple of days, 2.48 billion shares. I suspect that we don't have much upside. We have some probably significant downside, but that downside may even take us yet another 7 or 8 trading days to see, and we may be stuck here through expiration. Tomorrow starts the Delta neutral cycle, and wouldn't be the first time to see a push down into that for Wednesday, only to see it bounce and recover in the Wednesday afternoon. I do not have a good feel for this market moving either up or down right now, and I'm waiting for a much better signal. But we've got one position out there. I just think that discretion is the better part of valor right now, and no reason to be throwing money at this market until you get a signal that you have an abiding belief in, and I do not have one at the moment. I'm not going to try to risk $100 to make 5, and unfortunately, for the most part, I think that's kind of where we're at right now. Very narrow movements in the market, and a lot of jiggering of the markets by the governments, and we'll get into that today also. I guess it's time to get this party started.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1990, the thrift crisis, the savings and loan crisis, is everywhere at once. It blew up. The estimated cost of bailing out failed savings and loans companies, pegged just 1 year earlier at $158 billion, is revised by the government forecasters to a minute of $285 billion to $350 billion. We all erred dramatically on the side of underestimating the problem, says U.S. Senator Jake Garn. In other savings and loan news, Woody Lemons, the former chairman of Vernon Savings and Loan Association, is sentenced to 30 years in federal prison for bank fraud and taking kickbacks from borrowers. And that was everywhere in 1990. They always just plug the holes at the time and move on. And, of course, since these people are heavily motivated by money, they move on and find new ways to skin a cat. Of course, continuing a lot of, I was able to read some of the Panama Papers documents last night, and a little bit more about how it was all put together and what's all in there. Kind of very interesting to see exactly just how many people have money out there, and the incredible amount of art that the Russians are buying, at least the Russian oligarchs. One guy has bought almost $2 billion worth of high-dollar paintings through his shell companies in Panama. And I don't know what else you could say about it other than that. The other funny thing is, of course, that apparently a lot of the Chinese leadership has a lot of money over there for communists. They've got a lot of money. They've got a ton of cash. And what they did for 2 days since that has broken is try to shut off any outside ability for their citizens to read about this, and how many of the Chi-Com leadership actually have huge amounts of cash in these shell companies all over the world, but run from the law firm there in Panama. And do one thing, say another. Pretty much, like all government officials. The EU, we were talking about that. Of course, my belief is that everybody now sees the writing on the wall. It's a plus 5% on the needed EU exit polls. And since those really started to come out on the positive side over the weekend, everybody's now thinking that the EU is sunk. I suspect that that is one of the reasons why the U.S. government has been very hard working on keeping the dollar down and taking a fire hose of cash at any time, seeing that the dollar would strengthen over the last couple of months. But from Germany's DAX off 2.6%, France CAC off 2.2, Spain 2.3, all in that window. Of course, the thought is that you can't believe anything until it's denied. And of course, over the weekend, we saw many of the EU officials very much denying that the Greeks would also leave. But I heard a smack of Baghdad Bob in the background of that. And like I said, you can't really believe it until it's being officially denied. But that's it. What else? It is a mad market. But we'll go on to other things of interest and stocks that are moving out here in what is even though a little bit of movement, a fairly quiet market. Probably the most interesting to me is the way that Tesla reacted to the fact that they missed their earnings number last night, but no one would care. And there was a lot of rhyme and reason in what's going on with Tesla. And that is, it is a cult stock. We talked about this last Thursday. But opened a little lower this morning. And for the most part, kind of the low of the day. But more interesting to me is that people are willing to buy this at any price now. And it's not any better than the numbers that they reported last night. If you missed it, basically they said that they would sell about 16,500 cars. They sold about 15,000 cars and blamed the dog ate my homework kind of stuff about why the shortage in the 1,500 cars they did not make. You know, a lot of people love the company, and you have to separate the stock from the company. I think it is a fine company, wonderful company. Elon Musk is a wonderful guy. The stock is a $40 stock. At current earnings and projections is what I would pay for it for future gains. If this company continues to grow at the rate they say, it will only take 10 years for it to catch up to its current price, which is not bad. I always like investing money just to know I would break even if everything went perfectly. I will turn my sarcasm off now. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Allergen. Of course, dropped the chalupa with the government saying that they are not going to allow tax takeover between companies any longer. The real question is whether this is legal or not, and my guess is not. All tax bills and all one thing that most people haven't actually taken the Constitution and used it for toilet paper for is the tax clause, and that is all taxes must and tax regulations must actually occur in the House of Representatives. Why they may sign something, I'm wondering whether it actually is anything. And, of course, the last thing you want to do is say, Mr. President, I'm sorry, this isn't any good. I think you just have to take your lumps or take even more lumps. Jamie Dimon, of course, famously told the president off and was audited the next day. We can see, the big hand of the government out here. Of course, this is blowing away the previous low, which is the October 21st low at 237.50. It's gone through it. That was 15 million shares. We already have 31 million shares. I don't know what else you can make of that. Other than the fact is, I almost believe that I can tell the future, and my future will be the people that advocate the highest taxes are probably those people that actually have all the foreign accounts and shell accounts down there in Panama. What do you bet in a year from now we find that out? Just a thought. Anyway, a lot of discussions about this. Probably the best thing to do is, at least for the U.S. People, is to, of course, bring our tax regulations in line with what the rest of the world. We have the highest corporate tax rates in the world, and, of course, no one pays them because they won't bring any money back. They basically hide it everywhere. I remember when I worked for my Canadian friends up north, everything was all about the transfer prices between the United States. Everything was made in Canada, and of course all the profits, or 90% of the profits, were in the United States. about 10 or 15, maybe 10 or 15% in Europe. And it was all about how you rigged the transfer prices so taxes could be paid and what you could get away with in Canada shipping down here in the United States and what the United States would allow the CFO and CEO to get away with up in Canada. So it was always a race to the bottom, as someone said, in the den. What is this? Can you talk about the Amazon Web Services or Microsoft Azure versus Google Cloud Wars? Do you see either one dominating the field, or will it be a race to the bottom as prices for their services get cheaper to attract clients? Well, that's a very good one. Let's take a quick look at all three of those with the charts. MSFT. Of course, I think Microsoft has probably the least to win or lose with its cloud services, although it's making some fairly decent money on it. What he's talking about in the den, so if you're not familiar with it, are the cloud services for Google, Amazon, and Microsoft. Basically, is there going to be a big pot of gold? There already is at least a small pot of gold compared to these three big, huge companies. Amazon probably has the most to gain from it because, of course, they're in a low-margin business already. But basically, this is a business suited for those that are much more adept on the low end to maybe running a supermarket with very low margins and sales and promotions. But that's not the business that these three are really in. These three are in the business of selling upside services and software to go on those cloud services. So we can look at this as a loss leader, i.e. a inexpensive vacuum with all the attachments, the razor and the razor blade model. They're all fairly close to that. And the question is going to be, who can make the most off the side items that they sell? Now, Microsoft has its Azure service. Google has its service, and everybody knows Amazon's is the AWS service. But what these are a bunch of computers, and let's say that you're TFNN, and suddenly something big happens, and everybody and their dog gets pointed to TFNN. If you were running on the Amazon Web Services, you say, hey, I normally have 3 or 4 servers. I need 100 servers, and I need them in the next 5 minutes. You basically click a button, and everything would go out there, and literally TFNN could absorb a huge deluge of people coming that we don't normally see each day. But again, it gets back to the licenses that run on those particular web services. That is, for each one of those, you need a license to run whatever software is on there. The backside also, which is data services. Amazon doesn't have its own real database system, so it doesn't make money there. Microsoft does. It says it basically has its own database that I use and is scalable all the way to the largest companies. Then there are other services too, like playing back video and audio. Google has an edge there with YouTube. They have a great ability and, of course, the infrastructure to serve video to a great many people around the world because of its YouTube setup, and you can piggyback on that. Amazon, of course, has a big service that's more adapted to commerce. They can sell you all the stuff that they develop for their own commerce servers and sell it to you also. Now, Microsoft is the traditional business platform. So if you're already a business and you've written a lot of software that runs on Windows, guess what? The Azure service is very nice. You can take your code over there and apply it, your .NET code, your C++, and, of course, your C# software, and run it. So they all slightly compete in various parts of the business. They don't make much money renting servers. They make a lot of money selling databases, selling packages to set up online consumer sales. On Google's part, if your thing is being Netflix, then it works very well for Netflix to have its overflow directly go to somebody like Google that already has set up a lot of big pipes for YouTube service. So they all have kind of their own, kind of moved into what they do best. But it's all about selling that add-on service, the video software that actually delivers all of it, the extra bandwidth, the services, like I said. In fact, one of the things I'm working on right now is adapting my software to run on the Azure cloud, because there is a software package that I've never programmed before, but you can get it running fairly easily on a desktop version, and then take that desktop version, drop it into Azure, and it will give you an API to do it on their web services. So you don't even have to learn literally the new language. It will impart itself into it and let you run it through traditional Microsoft software and development that I already know. So there's a great deal of stuff out there. I'm going to call them 3 different real applications. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. One last more question. It says, do you see the need for Cisco products ever going down with the cloud services, or there will always be a need for companies to have their stuff in-house? Well, you still have to have a router. And the question is, whose router is it? The biggest problem I see with Cisco is they continue to get a fairly decent premium, and in not all applications do you need to do it. Eventually, I have a feeling that there isn't going to be a lot of new stuff in routerdom, and Cisco will be a manufacturer of a commodity device, even at the very high end that they're at. There are many companies out there that are in that business, and I just don't see a lot of big movement in Cisco right now that makes me think that there's some kind of new product that wipes out everything that the other peoples have. And I just think margins are probably going to slip. And of course, Chambers is exiting stage right fairly quickly in Cisco. I would imagine that the cleanup on aisle 5 will be pretty big after he's left the CEO position and everything hits the wall. Or the fan, as it's often said. Anyway, Allergen, we looked at Microsoft. Let's take a look at Amazon. I haven't looked at it today. This thing's like everything else. I think we talked about it a couple days ago. Still banging up against the wall of these big gap downs back there. And I think we're going to probably have a little bit of pullback here, a little bit push. And this last one, if you come up back up there the next time with 2.5 million shares into this gap down from the 29th of January, I think you probably have to say you're now in this lower trading range. That first leg is to 538, the next is to 474. So, well, anyway, hopefully that answered all those questions. What else do we have? Acadia Real Estate Trust. We've been watching a few of these. Just a big gap down on this. And the volume was about the same. It really, the big thing is that I'm seeing is a lot of these stocks that should have a sign of strength as they go through the highs are really not. This one gapped down today, not severely, but it wasn't pushing these highs on a lot of volume. February 1st, $34.74. On the 1st, we had basically 400,000 shares, so about the same, and this kind of rolled over. It didn't have a lot of energy on the way back up from the February 11th low. I wouldn't short it, but again, as we say, you need to see a sign of strength, which is a decent-sized candle and some volume. All you have is the volume on the downside today in this one. Of course, we talked about how poor the European stocks had done today. Watching Barclays pop under its previous low. That's the February 11th low at $8.52. 6.4 million shares. We already have 5.1 million shares. My guess is we're going to make that 6.4. But again, not a sign of weakness at the bottom. You would have liked to seen a bigger candle and a lot more volume. Maybe we'll get it coming in. British Petroleum, which I always have to laugh about because, of course, they bought out a company and said and promised that they would never, ever change their name for that company. And, of course, a year later, they changed everything to BP and just gave everybody a big raspberry. One of my bosses was big on this. He was mad as a hornet. For some reason, he loved the name of his gasoline company. This gap down a little bit, not that much. It's sitting at 29. But I'm finding two major patterns out here. One, of course, are these stocks that are just riding the 9-day moving average up for 20 days, 15 days, 10 days, a lot of them. The secondary part of this is stocks with, of course, lower highs and higher lows. And a lot of these things are kind of drilling into that. This one actually kind of busted out of the bottom in the last few days. So you want to kind of keep an eye on that. Still no real movement to the downside on this. And again, the first movement out of a asymmetrical triangle is generally the one to be faded. So maybe there is a little pop in BP coming. To the super companies. This one's been battling this gap down that goes back to the 4th of September last year, 1.3 million shares. Got into it or tried to get into it with 1.8 million shares, so you knew it was going to try it again. And it did over the last few days. The one that is interesting to me is the one on the 1st which just had 600,000 shares. The next day, 357,000 shares. Today, 175,000 shares. So again, coming down, you would have liked to seen some more volume. Why I think maybe this market could go sideways all the way through expiration on options a week from Friday. But we'll continue to take a look at. Other stocks that are stinking the place up, of course, is Suisse on the back of all those 2 and 3% losses in Europe for most countries. This one came down. Volume did pick up a little bit from yesterday. And, this is a gappy little stock because, of course, it does trade as an ADR. And you can almost look at these stocks and just know it from all the 400 gaps in a stock when you look at the last year that it is an ADR. But what you have out here, of course, is a move back into this last gap up. And that was on March 1st. This gapped up with about let's call it 4.1 million shares. We've got 3.4 million shares already. So this is another one that I'm looking at here. Now, you've got a couple of other lows that make me think that this thing is going to break. You also had a test of the February 11th low on about the same volume as on February 24th. It was a little bit lighter, but not enough for me. I'm pretty much saying there's 85% chance that you tag about 1250 on this, and that is where you're going to find out whether or not there's anything left in the bulls in there to hold it up to that low. Cisco Systems did gap down today. Probably just its huge market cap is the real deal out here. It has a nice gap up on the February 11th. I think that came in earnings that day. Did it with a sign of strength. Did have significant volume at 92, almost 93 million shares that day. And, of course, what it will probably do is kind of come back down into that $24 range and maybe setting up a nice trading range between 28 and change, and of course this big gap which should act as support down around 24. But that's it. DB, Deutsche Bank, another one out here. Did we already go through this? No, we didn't. Of course, another one that gapped down, another ADR. This one is now in the gap. That gap had about 8.6 million shares on the 12th of February. This one is probably the best looking of the bunch so far. Just 3.5 million shares on it, acting like maybe there would be something. Of course, the last attempt into this gap was February 24th, 4.3 million shares. You don't want to exceed that by the end of the day. When we're back, talk about Disney.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Walt Disney, of course, announced this morning that one of the guys that actually runs the show behind, the man behind the curtain, will be leaving soon. The thought normally when you see this go on is that he asked, am I going to be considered for the CEO job? They said no. He said, thanks. I'm going to go find somewhere else to play. And, basically he said that he will, through the rest of the year, continue to be an advisor. Normally, this is the kind of deal that is called green mail. When you leave the company, i.e., don't go to work for any of our competitors. What we'll do is we'll announce that you're a contributor to Walt Disney, but we won't tell you anything that would actually be useful because we don't want you to go anywhere else in the next 6 months with any of the ideas that we've been cooking up, because if you went to work somewhere else, that may be bad for us. So normally they set up these deals. He may already have a place to already go, but with things not really being that set with ESPN, with some of the other issues that have been around for Walt Disney, and this big high volume low out on February 10th that looks like it needs to be tested, the $86.25 low, looks to me like we're probably going to be coming back there. You should have a little bit of support at these gaps around the 90-92 level. But my guess is that they're going to be losing a lot of the high-end talent that got them here because, of course, only one person will be a CEO. The rest, of course, will go find better jobs at higher pay and probably CEO jobs in maybe smaller companies. It's almost a little bit of a silly season because that's exactly what's happening in Facebook. A lot of discussion about their chief operating officer in the background, and that she's leaving for somebody else. It had a little pressure on Facebook today. The question is, or let me put it this way, she gets a great deal of the credit for them turning around the company and actually figuring a way to monetize and make money at Facebook. I had no idea if they could or couldn't. I hate companies that come to IPOs that haven't figured out whether they're going to make money or not. It's more of a dice roll than anything else. Facebook probably had the best opportunity to do it. Just very weird that they did it way after their initial IPO and only after the stock price was absolutely hammered down to $20. But as we look at these kind of companies, keep an eye on them. For the most part, big hedge fund managers tend to sell when there are changes in the top they tend to come back in when they see what the results of those changes will be. So I imagine Disney and probably to a lesser extent Facebook, but if Sheryl Sandberg leaves Facebook, look for it to gap down a lot more than Disney did today. Do you think Twitter needs to sell themselves to stay afloat? Last time I looked, Twitter had a lot of cash, TWTR. And, they make money, last I looked, but not the kind of Facebook money, not real money. In the TV business, they call it sin money for syndication. Like Jerry Seinfeld got his $175 million for syndicating. That was his cut. I think the other guys, Lorraine and all the other ones, Kramer and the others, I think each one of those guys got like $50 million. Seinfeld himself, though, as a creator of the show, got $175 million. So everybody else, kind of small potatoes. Well, they're thinking this is the George stock out here, and it's worth maybe 1/3 of what Facebook is. They made a little presentation over the last couple of days about getting a deal with the NFL and tweeting out, I guess, every play, every other thing. I'm trying to cut down on the amount of times I'm getting disturbed by tweets and everything else. But I guess a lot of people are really into it. If you're a sports fan, I guess maybe you could have all the tweets from all the different games coming at you at once. What happened to just enjoying the show? Don't know. But anyway, the question is, how do they eventually monetize themselves? And nobody knows yet. And they haven't really come up with a good reason to monetize it or a good way. You got to think that everybody and their dog in that company is trying to find a way to monetize it. So I think someone will. There is a good use for Twitter, but it's not Facebook where you sit down as a couch potato and spend the next 2.5 hours looking at Uncle Joe's dog pictures and everything else. I think that's probably why I never got into Facebook. Huge amounts of noise to actual signal. And most of the stuff I read is on our RSS feed. I've got a lot of filters on there to make sure that only the stuff that is relevant gets through. That is the problem with Twitter and some of the other ones. I think they're going to change a few things to make things a little bit better. The question is whether or not it's a George or whether it's a Jerry in the sin money category. And I think it's priced right now at George, and that's probably fair value. If they come up with a Jerry Seinfeld kind of money out of this thing, like Facebook, it could be a real winner. So I'm saying it's mired down at these levels. I don't think it goes out of business. I don't think they have to go borrow lots of cash. They aren't spending a lot of cash. They cut a lot of that out, fired a bunch of people. I think they're lean and mean now, and we're probably one day away from some kind of big announcement of them figuring out how to actually monetize this business. What else? HSBC, of course, another one blowing away the lows out here in bank land. And, you needed about 6.3 million shares. Was probably the good news. The bad news is it has blown through that February 11th low. Even if you're fairly conservative and use the lower volume of February 24th, that's still 5 million shares. We got 3.3 million shares already. And my guess is you're going to have probably a volume dump into the end of the close today. So be watching those banks and how the volume comes in the last 30 minutes. So that's it. What else do we have? LYG. Take a look at a few of these other ones out here. Lloyd's Banking Group. This one had a nice bounce on earnings and looks better off than the most of these European banking stocks. But it's coming back in the gap, and it's coming back in the gap with a lot more volume than it gapped up on the 25th of February. 4.73 million shares on that day. We already have 10 million shares out here today. I think that tells you everything else. Most likely you're going to see the entire gap fulfilled on that one. This one had a little reversal, but it's a penny stock. Parsley Energy, a little gap down on that guy. A lot of volume. Let's find out about this one when we come back. You can give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're at 2053 on the S&P cash, now off just 13 points on the day. As I said, probably get another little dip in tomorrow and then probably see them try to push it up late in the afternoon tomorrow. But to tell you the truth, there's just not enough money for me to risk any right now on most things. I've got one position and I like it, and we'll sit on it. And if the dollar goes up, I think we'll probably be okay in it. I don't think it's going down, the dollar I mean, but I think if the dollar goes up, we'll do okay on it. And I think we've got enough time to let that position sit and soak. Let's see, we have any other questions out here in the inbox? Get messages. We will find out. Anyway, we're going to talk about Parsley Energy. Didn't know anything about Parsley. Got a lot of volume in it today. Let's look at the old headlines for this real quick and see what it has to say. Acquisition announcement. I guess they're buying somebody. Energy's off size. Okay. No big deal out here. No big whoop. Certainly, a lot of people didn't want to be on the side of the acquisitor on this thing has gapped down. But like so many of these stocks, this thing has been riding the 9-day up since, what is that, the 25th of February. So for a while, it'll be interesting to see how that plays out. Pacific Sunwear also out with, I think, some news. We will find it here in a second. P-Sun. Come on, P-Sun. Didn't like it. Oh, there we are. These guys are almost out of business. I don't know why they came up on my radar today. Prudential RBS in the list of companies over there in Europe not doing well today on additional downgrades in Europe. Thought that the British exit is coming. I guess it was the British invasion in the 60s. It is the British exit. I wonder if we're going to have another set of Beatles for this one. Not down on volume, though, so a little better looking than the most out here. And that is the last major low, was March 1st, $6.14, 2.3 million shares. Last couple of days, you'd almost think maybe you could have bought this. 882,000 shares on the 1st, on the 4th, 884,000 shares. So, man, it's tempting you. It's taunting you. It's gone, light volume down here at the lows and poof, right through it. But, of course, still no volume out here in comparison to that 2.3 million share day. So this is kind of where you see the wheat get separated from the chaff. Another bank, this one, of course, in South America, Banco Santander, down on a little gap. Not much volume out here, not hitting low. We will move on. We'll do our drive-by on this. Now, Seadrill, kind of interesting out here. I'm a big fan of the Wyckoff buy pattern. That is, wait for a sign of strength. That is a huge candle with a huge volume for a breakout. This went to 749. Then wait until it gets all the way back down to this thing on light volume. And it literally is a fairly decent-looking pattern. I'd have to do a lot more investigation on it. But if you're looking for a stock that has a standard buy pattern on it, this doesn't look too bad. In the meantime, sell when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien and Andy on the most of the TFNN radio network.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.